Welcome to another video. What we're going to be looking at in this video is how to set up and use QuickBooks Desktop Inventory. The first step is going to be for us to tick inventory purchase orders are active under the Company Preferences tab, and I'll show you how to do that right now. Now, to activate the inventory module, you'll need to click Edit from the top toolbar, then Preferences, then under Items and Inventory, you'll go to Company Preferences, and you'll make sure you'll tick inventory and purchase orders are active. Once we've activated the inventory feature in QuickBooks Desktop, we're gonna wanna make sure that we correctly create our inventory items. So that's point number 2 in my list. And then we're gonna wanna make sure that we actually record purchase orders or bills correctly. And finally, that we correctly enter inventory information when we're invoicing. So let's look at point number 2, which is creating the SKUs. The way we're going to be creating our inventory items is by creating lists, then item lists, then we can right click and select new. And we're going to absolutely make sure we click inventory part. We can give that inventory part a number. So I've called it A6. And you can also have a manufacturer's part. In case your manufacturer has SKU numbers. So in this example, I'm dealing with a fictitious company that sells office supplies. So I'm creating yellow highlighters. Now the cost of these is, I'm gonna give it 15 cents for each highlighter. I'm creating a vendor that we may usually purchase those highlighters from. It's not necessary to do this, and I'm giving it a sales price. So I'm saying that the 15-cent highlighters, I'm going to sell them for $1.10. And my reorder point, you can put this if you want, is 150 units. So when my inventory goes down to 150 units, I'm going to want to reorder more of those highlighters. So I'm just showing you, in the interest of moving things along, some items that I've created. So blue pens, red pens. These are items that I might have in my fictitious office supplies company. Rulers, so I gave them an item number, a cost, a sales price. Staplers, I assume that they cost 40 cents and I'm selling them for $1.75. Green pens. Now the thing I want to highlight here is that if we've actually assigned minimum reorder levels for each one of those items, we can actually look at how many items we have on hand and compare it to our minimum levels. So we can do that. We can customize what's in our list, and we just want to make sure that in those columns, we see reorder point. So I'm adding that. I want to look at it side by side with my total quantity on hand. And I can now compare. Obviously I have 0 because I just set up the file. All right, so we got our inventory items set up, or at least a couple of them. So we can move on to the third point, which is make sure you correctly record purchase orders. Now you may already know this, but there's a couple of ways that we can get to a particular module or screen in QuickBooks. I'm creating purchase orders by going in the item list and right clicking, but you can do so from the home page. So I'm selecting a vendor that I've set up. I'm assigning a purchase order number, and I'm selecting my SKU. Now you can bring that drop box down so you can actually see the different inventory items. All right, so we're happy with our PO. Now we're going to assume that we've actually received the bill from the vendor for the PO we created. So I'm showing you, if you go under the vendor center, under Sam's Pens, we can see the PO we created. So now we're going to create a bill, because we received an invoice from the vendor, and it will automatically ask us if we want to match the bill we've received against the PO. So in this case, we'll we'll go ahead and match it. I'm entering a fictitious bill number. Notice that the amounts ended up in the items tab, not in the expenses tab, in the items tab. And this is very, very important. You really need to make a mental note of this, because you should always use the items tab for anything that has to do with inventory. Don't use the expenses tab, because that won't enable you to basically have it affect your inventory. Now, so far we've covered points 1, 2, 3, and we can pretty much say 4. I mentioned that you need to insert whatever amount or whatever information in the items tab, and we're going to be looking at how that tab is affected in a minute. But I just want to show you how we can actually enter a bill without creating a PO. So now we're going to go to point number 4. All right, so same premise as when we entered the bill, when we received the PO. We're going to create a bill. I'm going to give it a fictitious number. And here in the memo section, there's actually a memo section where you can write additional comments just for yourself. So let's pretend we didn't create a PO for this. It was a rush order that we received from the vendor. So I'm just going to write a little blurb. You don't have to do this. I'm just showing you of what you can and can't do. So I'm going to pretend that we received from our vendor called Office Central 1,000 highlighters. And the cost of those was 15 cents each. So they cost us $150. So I'm selecting the SKU number or item number for those yellow highlighters. And again, keep in mind, this is all in the items tab. And I'm going to hit save. I didn't balance because I have sales tax, right? So that's not too important. Don't focus on that part, but I'm just adding the sales tax amount to my total amount. Now I can save. So I'm now going to show you what I intended to show earlier, which is that by entering all of those items in the items tab, we now have them in inventory. We're back to our list, and we can see that we've covered the first 4 points. So now we're going to get to the 5th and final point, which is creating an invoice. So we're going to open up QuickBooks. We're going to create an invoice. I'm doing that by right-clicking Create Invoice, but there's a variety of ways that you can get to the screen. I've created a customer. Let's pretend we sell to our customer called Multi-Pens. I'm using the item for blue pens, which is 8-1. And let's pretend we're selling 40 of those. Back to our slide, the 5 steps were completed. But what I want to mention is that the setting up of the inventory module enabled us to have inventory on a perpetual basis. And now if you're not an accountant, you might find that concept a little bit hard to understand. So I want to illustrate what the mechanics behind all of the entries we've done in QuickBooks are going to have as an impact on the financial statements. Alright, so I'm going to jump straight into my QuickBooks file. And what I'm going to do now is I'm going to generate some reports, just a P&L and a balance sheet to see what I have. And I like lining those up vertically side by side so I can look at both at the same time. So here we go. So I'm looking at this right now, and all of the entries took place around the same time in mid-April, so the dates don't really matter, but I'm showing you that we actually sold 40 pens. So we can see that value in our P&L as sales. And $4 basically represents the cost of goods sold on the 40 pens. So this is basically a perpetual system, not a cash basis system, because some people might be looking at this report, they might be looking at the income statement, and they might be thinking to themselves, well, how do we make a profit if we bought $150 worth of merchandise. And the reason is because that amount has gone into inventory. So like I said earlier, if you don't have a real accounting background, you might have a hard time grasping the concept of a perpetual versus a periodic inventory system. So what I've done here is kind of come up with a way to illustrate the differences. So to the right of the screenshot, what we see is basically the inventory list, which includes the reorder point amounts for the items that we created and the actual quantity balances that we have in the books. And what we have is 6 items that we created, but only 2 of them we actually ordered product. So blue pens and yellow highlighters, we have 180 blue pens and 1,000 highlighters. And you'll remember that we actually ordered 220 blue pens, but we sold 40, hence the reason why we have 180. So to the left of the screen, I'm trying to show you what outcome we would have, or what our gross profit would be if we would have been following a cash basis system. Basically, the way that will work is we would just look at the cash inflow, the amount of cash that we've received from our customers, and our cash outflow, the amount of money that we've spent buying product, to arrive to a net cash amount, which will basically be considered, or which will basically show up in our books as gross profit. So if we concentrate on that top left corner of the screen where it says cash basis, well, basically our net cash would be negative 136, basically meaning that our gross profit, or in this case gross loss, would be a gross loss of 136 because it factors in the amount of money we received from selling the blue pens, $36, minus all the amount of money that we spent accumulating and getting inventory. Now, what the perpetual system does, basically the system that we've set up and that we're using and that QuickBooks is following, is basically enabling you to account for inventory properly, in this case on a FIFO system, first in, first out. And what we see is that we have a representative actual figure of what inventory is, which totals to be $168. The $18 of the blue pens that's left over, and the $150 from the highlighters. Now, the only thing that's really going to impact income is that actual invoice that we created, because your sales are derived, just like in the cash basis system, from the quantities of pens we've sold minus the cost of goods sold, which are basically the same pens that we've sold at their cost. I hope the previous slide was clear enough in explaining the difference between a cash basis system and the actual perpetual system that we've set up and used in QuickBooks. Now, just to show you what would typically happen with a company that is not following a perpetual system, I've pulled up the slide to show you what are some of the typical steps that a company that doesn't have a good system will usually perform. And usually what will happen is they'll do a physical count of the inventory that they have sitting in their warehouse, and they'll make adjustments. So in this case, let's pretend hypothetically a cash basis was followed. The full $172 amount would have been applied to cost of goods sold, and what that would have meant is there would have been a gross profit of negative 136, or rather a gross loss. So a journal entry would have been made to account for the proper inventory that should have been recorded, and at the same time cost of goods sold is going to be corrected. So they'll account for inventory by debiting inventory by 168, and the figure that will be credited will be COGS. So you'll end up with a COGS of $4, which is your 172, which is sitting in your books, minus the 168. Just some final words. I want to mention that this was a beginner level tutorial, and there's plenty of other things that you can do in QuickBooks that I haven't covered, and I will be covering them in a future video for more advanced or intermediate users. Also keep in mind that the entirety of this video was done using QuickBooks Pro, so everything I've done you can do in a QuickBooks Pro version of the QuickBooks Desktop. However, if you're interested in using some more advanced inventory features, like for instance, you have a manufacturing business where you have multiple stages of work in process and you're receiving the raw materials and you're converting those eventually into finished goods, you're going to want to use a more advanced version of QuickBooks like QuickBooks Premium, because that enables you to use assemblies and builds, which I may cover in a future video. I hope you found this video useful. Please don't forget to like and subscribe.